Chris, maybe the way Forex markets have gone, Tim, is this an overreaction? Is this likely to infect the risk trade on our market throughout, not just today, but maybe through the week?
Sorry, was that to me, Carson?
Yeah, absolutely.
Yeah, sorry.
Yeah.
I think we could have expected that loss to be greater than the SPY futures today. The SPY, remember, is set at the end of US trade early Saturday morning our time. So if we actually have a look at the currency markets this morning, that while the Aussie dollar had a pretty good run last week, if we look at a 10-day chart of the Aussie dollar, you can see it actually ran up from about $1.02 at the start of the week to above $1.04 by the end of the week. But you can see here this morning it's dropped back around half a US cent. And if we have a look at a 10-day chart of the euro versus the US dollar, you can see a big drop off here this morning in that currency as well, and that has been from that news from Cyprus. Looks like they're going to be getting that 10 billion. Well, the 10 billion bailout was approved, but it's got some quite stringent measures attached to it, including a bank levy, which has seen pretty negative reaction in markets. 6.75% levy on bank deposits. Now, that certainly has put some worries around the banking system in peripheral nations in general, and it sort of hit confidence in markets. So I think that's why we're seeing this heavy fall today. And if we look at the Aussie market, we can probably expect a pretty broad-based falls across the market. Even though some of the commodity prices were higher, I think that negative sentiment will still hit the miners. Possibly the gold space might do okay today. We saw the price of gold back above 1,600, so it may well benefit. But we're also going to see quite a few stocks going ex-dividend today. Woolworths is the big one, but also Newcrest Mining, Cardno going ex-dividend, so that might exaggerate the losses on the market today as well. I think the week ahead, certainly be looking at central banks. Tomorrow we've got the Reserve Bank releasing its meeting minutes from the March meeting, while on Wednesday we've got the FOMC meeting in the US, and we know how that the easing policy within the US has helped markets recently. So probably one of the biggest risks alongside Europe at the moment would be an early exit or a slowdown in quantitative easing from the US. So I think that statement and comments from the FOMC meeting on Wednesday night from the US will be very closely watched by markets.
This annual review released. What stood out to you?
Well, it was released on Friday night, and 2012 obviously a bit of a tough year for miners in general. Rio, no exception there. The shares lost around 10% over the calendar year through 2012. But there was a few key points I think we can take note from this annual review. They did outline 3 key areas they'll be focusing on in 2013. The first of which will be prioritising capital expenditure, which is going to be very important. So they're going to be focusing on the highest quality, best return type projects, and possibly divesting any lower return or non-key and non-core projects at the moment. They'll be also looking to reduce costs, particularly important in an environment where commodity prices are a little bit volatile. The possibility of lower commodity prices means they need to improve their margins. This can be done by reducing costs. They're targeting around $5 billion over the next 2 years. While lastly, that third point is approval of their growth projects. So this is particularly within their iron ore expansion in Australia and that copper project they have in Mongolia. They did comment on the outlook for commodities remains quite volatile. Certainly the Chinese reform agenda providing a little bit of uncertainty within that space, though they did mention that they expect momentum in China to continue and expecting GDP to be above 8% through 2013, which was a positive. Also strong demand from other South Asian countries such as Indonesia and India. I think what we saw in the results recently from Rio, the dividend was a particularly nice surprise. $1.67 came in above expectations. We've heard plenty of investors calling for bigger dividends to be paid from Rio Tinto and other big miners and less being put into projects. So I think through better capital allocation, we could see better dividends coming out from the likes of these miners, which would benefit the share price longer term.
Evan,